Good afternoon, all. Camelback Trading 2724 and the pitfuturestrading.com coming to you this Wednesday afternoon, March 18th. And what a day again. We're looking at the last 3 days of the market profile here on the SPY ETF. And again, we were down a lot. Silver lining, though, again, at the end of the day, with a big difference, though. Before we get to that, I just want to talk about a couple things. So I had some comments and questions for me this morning about what I had said on my video, and people saying, well, you're complaining about what's going on with the market. What would you do? First off, an interesting stat. The Dow in 19 trading days at one point today was down over 10,500 points. How long did it take for the Dow to get to 10,000? I still have my 10,000 Dow hat. I got to bring it out. Maybe I'll wear it one day. So that's incredible. 10,000 points in 19 days. Okay, a couple of things about what I was talking about this morning and things that I heard. They're talking about putting the uptick rule back in for shorts or banning short selling altogether. Having shorter trading hours and whatnot. How about they try something like this? I was a member for 25 years down there. When I first started, we traded in eighths of a dollar. Now, I know algorithms won't like that, but these special times call for special circumstances. How about we start for 30 trading days, you trade in eighths of a dollar, and reinstitute the uptick rule for shorting. And for those who don't know what that is, that means that the price of the stock has to be up for you to short it. Taking away the uptick rule, or putting the uptick rule in, trading in pennies, is absolutely useless. Useless. All an algorithm has to do is push the stock down, tick it up one, and then short whatever they want. Eighths of a dollar, they might think twice. So that's one thing that can maybe stem the tide. Do it for 30 days. Trading halts, useless. Third time now in the last whatever trading days, useless. I was looking to short when we made a new low because I thought we'd finally go and get that December of 18 low. But I realized as soon as we broke it, if I did that, we're going to stop and get halted. And that's exactly what happened. So I luckily didn't put the short on. Now, as soon as we opened 15 minutes later, I showed it trading at 234 in a heartbeat. And the next thing we're trading at 236 and change. So if I was short, I wouldn't have been able to cover it, even though it would have been a winning trade for $2 at the time. So these trading halts, useless. Let the markets trade. As far as shorter hours, absolutely not. Absolutely not. Everything's machine driven. There's no reason. There's no paper to deal with anything. No. In fact, this is what I propose to make it a more equal playing field. Let the SPY and its options, the ETF and its options, trade the same time that the ES trades. There's no market makers anyway. The risk would be to me and anybody else who wants to trade it in the middle of the night or in the morning or whatnot. But at least give me that option. So not only shouldn't we have shorter hours, the SPY ETF, since it is the S&P 500 also, should trade and its options the same time as the ES. Plain and simple. Okay. Now, we closed, getting to today, we closed at 240 today. We had a chance for a trend day down. We gapped lower this morning, filled the gap in a nanosecond, and had the most powerful opening you could have, which is an open and drive. It opened and drove straight up. Straight up $7. It's an incredible drive straight up. Now, most of the times an open and drive is never taken back. It was today, obviously. The positive thing about today, and I'll get to that in a minute, I'm going to go over my trades. So I did nothing in A period. When B period opened and we started one-time framing up, took a short right as we got to around B's high. And B's high is very confusing today because we had levels jump up to 248.37. I'm going to use that. A lot of times I have bad ticks, but that might happen in G period where the high was established already and then G ticks up here while it's trading down here. That's a bad tick in my opinion. But when you're trading in that time frame, making new highs, there's nothing to say that's not a legit trade. So I'm going to use it. So I shorted it not up here, but around this level. and covered when we got to A's high again. I also took a short in D period as soon as we took out C's low and started going down. I took a short in E period, same thing. Now remember, I'm in 27 tick increments. So as long as these look, put them in ones and you would need a movie screen to cover them. I took a short in the ETF in H period when we made a new low. Shorted the ETF that time. And then after that, in H, I, and J period, I scalped shorts between 5 and 10 lots. My biggest lot today was 15. In these markets, I'm not going to trade bigger than that. You can make or lose a lot of money just with 5 or 10 lots of options, 10 contracts. So every time we tried to rally, shorted it, came in 30, 40 cents, took it off. Did it 2 or 3 times in each time frame. Why wasn't I doing it on the buy side? For a lot of reasons. We had lower value all day. We had a chance at the time for a trend day. We had 3 sets of single prints at one time, and we're one time framing down. I'm looking for nothing but shorts during a time like that. And it worked every time. I even did it in J. Once K period took out J's high, that game was over. Had a very good day. I didn't do anything in K, L, or M. M actually threw me a curveball. When M took out L's low, I thought we might actually go and attempt to get the lows. But that was a heck of a curveball as we ripped higher. Now, here's the silver lining, and I'll show you more clearly on the charts. We are one time framing down 3 days again. However, we finally took out December of 2018's lows. And when we did get acceleration, right? The low was 233.76, and my low on the day is 228.02, which happened in J period. However, we snapped right back into it. So we made the new low in J, but then in K, L, and M, never saw it again. We did see it again, but we one time framed up except for that little blip in M and closed way above it. The trend day down failed. We closed back inside December of 18's range, and we closed back inside Monday and Tuesday's range. Now, one day doesn't make a market, but it's a lot different than the other times because this time we at least took out that low to see what was below there and came back. Now, destinations for tomorrow. Incredibly, with a range of over $20, we don't have anything but the high and the low. So if we open up inside today's range tomorrow, the chop you're going to get is going to be absolutely tremendous. So your first upside destination will be today's high of 248.37, which is $8.37 higher from where we closed at 240. Then we have 10 wide at 250.34 from yesterday, right? That was a downside. We opened below it, becomes an upside. Then we have 256.17, yesterday's high. Then we have 256.90, Monday's high. Then you have 257.10, 11 wide from the 13th. And then we don't have anything to 271.08. For the downside, we don't have anything to today's low of 228. $12 lower. You want to talk about what kind of chop you're going to see tomorrow? Just wait and see. 228. Then we have 227.43, 11 wide from February 2nd. 227.16, afternoon pullback low from the 2nd. And this is of 2017, folks. And 226.82, a monthly low. So we wiped out all of 18, all of 19, all of 20, and most of 2017 in this 19-day run. Now let's get to the charts. Okay. Let's go to monthly. We're one time framing down for 2 months. We finally took out 2018's low, but snapped back into it. Again, one day doesn't make a market, but it's a baby step. So now let's see what happens. If we're able to stay inside that month's range and don't take out our month's low now going forward, then maybe we avoid going down to that 208.38 level, which would be my next major destination. Weekly, one time framing down, 4 weeks, still very ugly. However, back in and above that weekly low from December of 2018. And then the daily, and this is the one that I was talking about. See, we had that 3-day balance. I said, well, maybe we came back into it. We put in a low. Nope, gapped lower. Well, maybe here on this, nope, even though we took out the one-time framing down, filled the gap, no. Why is this time different? It might not be, but we did finally get to a very, very visual level, and that's December 18's low. Took it out, went below it by 5 points, and snapped back into it pretty good, right? Right now we're $6 into it. Again, one day does not make a market. We are still one-time framing down 3 days. The only way I'm going to be right is if we stop the one-time framing down and attack the top of this 3-day balance. We might have an inside day tomorrow. Now, we've had $20 ranges, so the odds of an inside day are probably slim. But that would also be healthy. If you were to get consolidation inside today's range, all of tomorrow, and then on Friday, come out of it, hopefully, to the upside. That would be a pretty good thing. Because if you have consolidation and then come out of it to the downside on Friday, well, then our lows probably aren't put in just yet. So, again, it's going to be baby step for the bulls. First step is to take out today's high and stop the one-time framing down and go forward from there. I hope you had a good day trading. Have a great night, and we'll speak prior to the opening tomorrow.